Hey guys, Stockaholics, thank you guys for being here today. I wanted to talk a little bit today about my favorite company and my largest position in my portfolio. That is OTC Markets Group. What I find most interesting about this company is that despite this company growing at a reasonably rapid pace and beating expectations quarter after quarter, at least for the last couple of years or so, what I find interesting is just how little interest there is in this company in terms of financial media and other YouTubers and content creators. And so I wanted to talk a little bit about this company today and why I hold it. I made a video talking about this company and all of the different revenue segments this company has. And I'll put a link to that somewhere below in the comments or in the description. But to kind of summarize this company, essentially they operate in the over-the-counter securities market. They have a few different ways that they generate income. One of those is when companies come and sort of list with these different tiers on this over-the-counter exchange. Another way is that they have a recurring business model where they sell subscription service to for this information on these over-the-counter securities to different brokerages. So it's like if you're on Fidelity or you're on Schwab, they have a recurring contract with these guys to kind of get information on these guys that have these kinds of over-the-counter securities, right? So I really love this company because it's basically a monopoly in this space, right? It's a unique high moat business. It has about 40% or so, a little bit more than that, in terms of insider ownership. Now, some people argue that that's too much insider ownership. Whatever. I like that. It tells me that as Charlie Munger would say, that you show me the incentives and I'll show you the outcomes, right? It shows me that the incentives with the inside management is very much aligned with shareholders. And you can see that in the terms of the special dividends and payouts and things that we see with this company too. And what I'm going to mostly focus on in this video is what I believe are the long-term tailwinds for the company. But I really like the last video I made. Recommend checking it out if you are interested in this company. Part of the reason I first started getting interested in the over-the-counter market in the first place were because of things like this. On YouTube, you guys may have seen there's a lot of popular videos out there essentially describing how we're in an everything bubble right now, right? Where everything's just massively overvalued. So on this screen we're looking at is the Buffett indicator, and essentially the overall price of the entire stock market in the United States is extremely expensive on a relative basis to where it has been in the past. And the stock market goes through cycles just like all kinds of things, right? So at some point, it's very reasonable to suggest that this extreme overvaluation will eventually turn into undervaluation. We'll either have to grow into those kinds of valuations, or those prices will, at least the theory suggests that those prices will have to come down, right? And these kinds of valuations can last for a really long time, but eventually they always do get unwound, right? And so when I started noticing all of these kinds of things and the extreme valuations in the stock market, I really started thinking about, okay, well, how can I invest and how can I find value out there, and how can I diversify away from what I think is an extremely overvalued market? And that's why I first started getting interested in over-the-counter securities in the first place, is because you can purchase securities that aren't necessarily tied with the US market. I can buy stocks that are listed in China, I can buy stocks listed in Russia, I can buy stocks anywhere in the world, right? So that's one of the reasons I like this company as well, is because I think that there's a lot of tailwinds for people like me who have this kind of mindset. And you say, you know, I want to own companies, I want to own stocks, but I don't necessarily want to own them in what is one of the most overvalued markets in history, right? Now, one of the reasons we may see this record kinds of valuations in the stock market is because real interest rates are so low. When I was a kid, my dad, he would purchase savings bonds for me. I don't remember what they were yielding or how much they were worth or anything like that, but he would show me and say, hey, look at this savings bond, it's in your name, Mark. And I remember that, and looking back on this, you know, that made, at the time, it made a lot of sense because you could earn an interest rate, a safe interest rate on those bonds higher than inflation. But where we are today, that those kinds of conditions no longer exist. If you're purchasing a bond today, you may earn between 1 and 3% interest depending on where you are and the maturity on that thing in the Western world. And so what this is doing is it's forcing a lot of people to go out and to speculate. There's a lot of people out there who say Bitcoin is one of these things. It's where people are, or cryptocurrency in general is a function of this, because so many people are trying to earn a yield somewhere that they just couldn't in the past. So it's forcing money into more and more speculative assets. One of the reasons I like over-the-counter markets is the company OTCM Group is because they stand to benefit from this trend. They have what I would describe as highly speculative instruments that list through them, besides just normal high quality securities as well. They have venture capital companies that list with them, and they also have pink sheets companies that list on their exchanges as well. And so the more interest you see in these kinds of speculative instruments, the more this company stands to benefit in terms of earnings and revenue in the future. And so those are the two main reasons in terms of trends that I really like this company, is because the company stands to benefit not only from what I believe are traditional value investors who might decide that, the US market's too overvalued, I can't really find a deal anywhere. They can go through the over-the-counter market and they can buy some very high quality companies in some of those upper tiers that list with the company, and they can diversify away from that US stock market. At the same time, the company also plays on a lot of the speculation that's out there too, where there's a lot of interest in these highly speculative assets like the pink sheets and the venture capital that also lists with over-the-counter markets. Now, this is one final thing, I guess, in terms of trends that I think stands to benefit this company, and that is this thing that we are seeing a lot of concern about with lately, called inflation, right? One of the things that's awesome about OTC securities is that they may not have a lot to do with your home country currency, right? So if I'm concerned about inflation in the United States and I can see, oh, well, the inflation rate in Japan is really, really low. Why don't I purchase some companies that do business in that country that has low inflation relative to my own, right? So you can actually diversify in terms of your actual currency by owning companies that do business in different currencies around the world. This is an article on Seeking Alpha from Youssef Tav on OTC Markets Group, and there's a few things that I wanted to share from this article that I thought were really interesting. I'll put a link to the article somewhere in the description below if you're interested in reading the whole thing. One of the things I really like about this company is the moat, right? The competitive advantage. So first, alternative products do not really exist. So one of the great things about this company is there's no competition. Therefore, OTCM is able to increase prices faster than inflation. Again, we talked about that inflation concern before, right? For example, effective January 1st, 2020, the company increased the monthly subscription price for level 1 and level 2 professional users of market data from $30 and $75 per month respectively to $35 and $85 per month respectively. What you've noticed with this company is they continue to increase their prices and offering. They continue to increase the amount of users through their different customer bases out there. And they also charge them more money. So they're just, it's amazing growth out there. Professional users cannot find the data anywhere else, so they are happy to pay $5 or $10 extra a month. In fact, the number of professional users increased by 5% in 2020. Second, the cost usually makes up a small percentage of companies' total costs. So the total cost of customers won't be affected much, even if OTCM increases price by 10% each year. Here's another example from the 2020 annual report. In September 2020, we announced that we will be raising annual fees for our OTCQX market from $20,000 to $23,000. These are for companies to list with their on the OTC, the fee that they charge them. Effective for companies joining the OTCQX market or renewing their services after January 1st, 2021. And a lot of these are recurring fees. This represents the first raise in our annual fees for the OTCQX market since 2016. Companies on our OTCQX market choose to renew their services at the end of each calendar year, effective for the following calendar year for the annual OTCQX subscription period beginning January 1st, 2021. We achieved a 94% retention rate, up versus the 92% retention rate achieved for the annual subscription period beginning January 1st. So not only are they raising costs, but their retention rates at the very same time are increasing from these companies. Now, not only does this company generate income from companies that go and list on the OTC, but they generate recurring revenue from brokerages. So I own a company like Fidelity. Fidelity has a lot of over-the-counter securities. So Fidelity is one of the customers that goes and pays for some of the services that OTCM has. A lot of it is like regulatory related issues and stuff like that, and market data, right? Now, one of the things we've also noticed is that there's probably a lot of potential to attract more of these kinds of customers out there. Over the past few years, the number of retail investors has significantly increased. However, many brokers such as Robinhood do not offer OTC securities. In fact, that's one of the reasons I don't like Robinhood, among some other reasons, is because they just don't have a significant offerings on what the kind of securities you can purchase on there. If I want to buy over-the-counter securities and Robinhood doesn't offer them to me, why would I open a Robinhood account, right? But we've seen is there's been a lot of new brokerages out there. And as interest continues to increase in this kind of a sector, the more that these kinds of brokerages, in order to remain competitive, in order to attract customers much like myself, they have to offer these securities, right? So there's a lot of opportunity for growth in terms of these kinds of customers. So there's a possibility that more brokers offer OTC listed securities, and a significant number of new retail investors start trading in those securities. Also, with more retail traders, more high frequency traders will enter the OTC space, and the securities will become more liquid. Here's what the company said about the number of non-professional traders in its 2020 annual report. Following the outset of COVID-19 pandemic, we saw a significant increase in the number of non-professional users of our market data, with 20,673 users as of December 31st, 2020. This represents a 60% increase over the 12,882 users of our data as of December 31st, 2019, and a 77% increase over the number of users as of March 31st, 2020. Historically, and in the normal course of business operations, we have seen fluctuations in the number of non-professional users, in particular in response to volatility in the market and increasingly retail trading interest in hot sectors. And so, even if you think, okay, this is an unsustainable level of growth, and that I would probably share that opinion. I think one of the biggest risks to this company is a lot of those kinds of customers, a lot of retail who have just been swept up in what is probably a mania right now. One of the things that kind of still gives me solace to kind of own a company like this, despite that mania being possibly ending at any moment. What I did is I looked back at this company in 2008 and 2009 and some of their revenue and earnings during that period. What I found really fascinating is that during what was one of the worst financial periods for a company like this, they actually increased their earnings during this period. So when I saw that, it really gives me a lot more solace to kind of own a company like this during a time much like we are right now. One of the things that we've seen lately is there's a lot of concerns with China for a bunch of different reasons. But one of the issues we've been seeing lately is a lot of fear regarding these Chinese companies that are listed in the United States having to possibly delist. In my opinion, I think that there's a high probability that this trend continues as well. So Chinese companies listed on Wall Street will likely to be cut off from U.S. capital markets in the next 3 years as tensions between Beijing and Washington persist. So I think that there's a lot of belief that this has a lot to do with politics, but I think a lot of it is stemming from just China wanting to have more domain over their own companies. They're having a lot of their best companies like Alibaba and Tencent and all these companies listing in the United States instead of instead of their own markets, right? Now, if this trend continues and these rules don't change where these companies have to delist, these companies are not going to suddenly stop trading. And Chinese companies are not suddenly going to stop wanting to access US capital markets. That will not go away. What will change is that these companies will not trade on the US stock exchanges like the NASDAQ, S&P, whatever. They will trade in the over-the-counter markets. And so if this trend continues and that this ends up playing out where there's a lot of Chinese companies delisting in the United States, this tremendously stands to benefit a company like OTCM, where these securities will likely trade. And so I find it just so fascinating how such an incredible company with such tremendous tailwinds can receive so little public interest from financial articles or YouTube channels, much like myself. But hey, I hope you guys have a great Christmas season or whatever you guys celebrate. Happy holidays. And if you think I missed anything or you have any questions, let me know in the comments below. I'll see you guys soon.